All right, so guys, you are welcome to the part 3 of the introductory video to financial management. And here we are looking at the economic impact, the impact of the economic environment. So we will be looking at how economics affects financial environment, okay? Because in the part 2, one of the things that we looked at was how the regulatory environment affects financial management. And before then, we had looked at how the governance of a company affects its financial management. We all know the import of financial management, right? So the whole thing about financial management and its purpose is that we want to increase shareholder wealth. And I would advise that you really understand the concept of financial management. Other than that, it will be just like you are learning some notes to go and write an exam. No, but if you realize that we are managing financial resources, the whole concept of financial management is that we are managing financial resources. So these are the financial resources, and we are looking at something like money. All right. So that is what it is, finance. So we are looking at like something like money. All right. And it is this money somebody has invested. This money came from a shareholder. All right. Now, the shareholder has given his money for the establishment of a business. Okay. Now, in that, we learn something about corporate governance. And in the corporate governance, if you remember clearly, we're looking at some kind of principal and agent relationship. So if you recall, that is what we did. So what you saw was that these are the shareholders, okay, who have given their money to these ones, the board of directors, to manage it for them. Now, the essence is that, and this is where everything we do in business studies come in. You see, when this analogy is happening, it means that this guy or this group who has received the money of the shareholder must account to the shareholder. And so in that, we have financial accounting. Because what are they accounting for? It is the financial resources. All right. So they are doing, that is where we have the course of financial accounting. And that one grows into what we call financial reporting and corporate reporting, given the size of the money. All right. So from there, we do financial reporting. Okay. Then we come to corporate reporting, given the size of the resources. If the group, we are looking at corporate. All right. So that is what you have it for. But you realize that before somebody can prepare management accounts, financial accounts, sorry, he wants to make sure that the company is doing well. And therefore, that comes in how to use the resources that they have been giving them internally to make more profit. And so they need to make decisions. These people need to make decisions. And so we get another course called management accounting. So that is what you see. And the fact that these people have to report, the reporting that they are reporting to them, they are reporting to these people. How sure are we that the information they are giving them is correct? Because I gave you my money, you need to tell me how you've used the money. How sure am I that the information that you are giving me is correct? And that is why we have a course like audit and assurance. So that is what is happening. All right. So of course they will pay tax. So you have a course like taxation. So that is where, and they will employ personnel, and therefore somebody must look at the welfare of the personnel. So you have a course like HR. So you see those things are coming from all these things. Now, the essence of all these HR, audits, everything is to make sure that the returns that these people who are using the resources will give these ones have been maximized. And so that is the essence of our financial management course. And if you get the understanding, rather than making it look like you are just reading notes to write an exam, it will be better. All right. So just get the real deeper understanding of what you are doing. And so we realized that, okay, so if this relationship is not put right, something can happen. So we looked at regulatory environment, we looked at corporate governance. All right, that is where corporate governance comes in. Now, we've also looked at how external things or external regulations will affect the objective of kind of maximizing the shareholders' wealth. So where we looked at the Bank of Ghana and how the Bank of Ghana's policy is affecting them. And we are going to go deeper into that one. All right. So that is that. We looked at the NPRA, National Pensions Regulatory Authority, said that when they increase all these pensions money, the disposable income of people go down, and buying the goods that have been produced by these people will go down. Therefore, the shareholder wealth maximization will go down. So anything financial management must be related to the financial wealth maximization. So we did that in the part 1 and the part 2 videos. Now, in this video, we are looking at how the economic environment affects the financial management objective of maximizing wealth. All right. So when we take the economic environment, we are going to classify the economic environment into two. Everybody that has done economics understands that we have two main branches of this economics. We have the microeconomics. So the microeconomics. And we have the macroeconomics. But our focus today will be on the macro, all right? So that is that. But because when we talk about the microeconomics, we are looking at the behaviors of an individual, the economic behaviors of an individual. So this one is limited to individuals, all right? So that is that. So it is limited to individuals as a person, like individual. We are looking at individual firms, or let's say individual households. So we are not looking at them together. We are just looking at them individually. All right. So basically that is that. But when we combine these firms, when we combine the individuals, we combine household, we get a nation. We get a nation. All right. And so the macro is looking at the aggregate of these ones in terms of a nation. So that is where the macro is looking at. So macro combines the individual persons, the individual firms, then the household, the families, communities, all right? It combines them. So that is what we'll be looking at. We are looking at the economic behavior of a nation. Now, you know that when we talk about economics, the simple things that come into your mind is demand and supply. Is that not it? Demand and supply. This is the basic thing that comes to the mind of everybody. So how your salary is be able to use to demand and how people are able to meet those supplies. So basically, that is what we are looking at. So we are looking at a macroeconomics. All right. So that will be our focus. So now, in terms of macroeconomics, it can be demand and supply of goods and services. It can also be demand and supply. And this, because we are doing finance, we are going to focus on money. The demand and supply of money. Basically, that is what we're looking at. So a nation may develop a macroeconomic policy, and that is what governs a nation. Everything is up. So when you hear the politician talking about the economy, we are looking at what macroeconomic policy that they can put in place so that we will be able to manage the demand and the supply of a nation, whether demand and supply of goods and services, whether demand and supply of employment, whether demand and supply of money. It depends. Anything, all right, that concerns the economy as a whole. So when we are looking at the economy, we are looking at macroeconomic policies. Basically, that is what we are doing. Macroeconomic policy. So that is that. Now, in dealing with the macroeconomic policy, we must understand that it is the function of a government. It's a function of a government. And this government can make a policy that can transcend influence on even the micro. So they do policies that, you see, when they do policies for Bank of Ghana, or they make laws to govern anything in this country, at the end of the day, it is you and I that feels the pinch individually. So that is how it is. All right. So if they make a macroeconomic, you see, we are in Ghana. We just did our elections, and we have the NDC winning. And you've heard in their manifesto that they are going to do a 24-hour economy. And you know what they say at the back of it? What they say at the back of it is that it is going to create more employment. So what do I mean? The macroeconomic policy of the government machinery, at the end of the day, transcends to the individual. Okay, what if they say that because our debt have already exceeded our GDP, we want to work and generate more money so that we can pay our debt? So now working hours is no more 8 to 5 p.m. Working hours is 8 to 6 p.m. It means that who is it going to affect? We, the individuals, especially those in the public sector. And again, if they do it on the wage, it is going to affect individuals. So these things affect, though it is a macro perspective, at the end of the day, it affects the micro, the individual. And so when they set the policy, what then is their objective? Why do they set macroeconomic policy? What are they trying to achieve? Basically, there are about 5 things that they are trying to achieve. When they say 24-hour economy or any other policy, what is it seeking to achieve? Number one, you realize that it is about economic growth. It's about economic growth. Now, when we say economic growth, what are we looking at? We are just looking at the national income. The national income. So the GDP. So how much is Ghana producing? How much are we selling it at, whether locally or externally? And how much are we getting from the production? So we take the petroleum sector, if you take the mining sector, how much is Ghana making out of all these sectors, the agricultural sectors? So if they do Ministry of Lands and Resources, how much are they generating for people? If they do agriculture ministry, how much are they generating for the government? If they do what do we call it, minings and all those things, how much communication, how much are they generating? Because if before MTN will come in, Ghana must take something. Before Airtel will come in, Airtel Tigo will come in, Ghana must take something. Telecel, Ghana must take something. So it is not free. The individual ministries created to cover the sectors of the economy must generate money for the economy. So they make policies for these sectors to get the money, so that when we put Ghana's resources together, Ghana will say, this is my salary as Ghana. So that is what they are doing to have economic growth. Because when you have economic growth, what it means is that the national income in real terms has increased. Now, if the national income in real terms increases, then it means that it is going to be caused by 2 things. Now, remember, if you're a business and you want to increase your revenue, what do you normally do? It's either you increase your the marketing of your product, you're able to sell more, or you increase the price. Now, you see, in our case, when prices are increased, we call it what? Inflation. Is that not it? Yes, that is it. And that impact on the standard of living of people. So it's either Ghana produces more or Ghana increases prices. That is what is happening. So unfortunately, in our case, we are not producing. And so the only way that the government is getting the income achieved is increasing prices. And that is what is happening. Because if not that, one will say, but it is not the government that is increasing prices. It is the government, because it is the government policy that is causing the prices to increase. Government policy at the port. So these are government policy on exchange rates. These are what is causing the things to increase. So that is one objective. So increase national income, and there are 2 ways to go about it: produce more or let prices increase. So a government must come in with a policy that increases production rather than increasing prices. Because if you do that, then we will have the best economy. All right. So that is that. Number 2, because you don't want to cause the prices to increase, and you probably use production. Your objective, therefore, is to control inflation and have some sense of price stability. And so if you are a financial management student, the parameters you must base on it to vote shouldn't be difficult because you are a financial management student. All right. So that is that. Now, so basically that is that. So if you take money from people, you use it to produce. Government takes money like in form of taxes. So you see, increasing the prices is really a function of the government, because if I am having my business, you increase my tax, who should be bearing the tax? It should be on the individuals. That's why we said that the government policy, at the end of the day, transcends its effect on the individuals. And that is why we felt it. Yes, as Ghanaian, I think we felt it that much. All right. So that is that. You see, even with the health sector, okay, if government doesn't have a policy to make sure that people are healthy, at the end of the day, it will affect production. So you see, it takes, I have always argued that our presidency, we should start having business-minded people into the government as president. Like if you look at America now, like Donald Trump, these are businessmen. They know how their decisions will affect businesses. All right. So these are what we are looking at. So you don't take, I am against mostly people who are just politicians, political science, get into politics, get into local government, probably become a minister or an MP. Then at the end of the day, you become a government. If that is the case, no problem. Then you must take advice who has knowledge about the economics. Unfortunately, we've had one that has already proven us wrong. That is that. So we keep having, so we change government. I'm curious to see. Now we have a professor who will be a vice president, and so that one is more geared of academia, literature, and so I'm very curious to see who will be the finance minister of Ghana. Yes, I'm very, very curious because these people will hold these financial management function. I'm tipping two things anyway, two people. It's either the minority, or I don't know if he's minority or majority, because I know he did finance. He's a chartered accountant and he's even a chartered CIT member. And so I foresee him becoming the finance minister, because he used to be the deputy finance minister. And my own personal lecturer who taught me taxation, Mr. Setekpe, to can come back as the finance minister. So let's see how it goes. All right. So let's see. All right. Now, so another aim is to also achieve full employment of resources. Now, when we talk about full employment of resources, it means that everything is at play of work so that human beings can also get a job to do. So lands are not idle. And that is why these are the things you see that the politicians' manifesto should be revolving around on. The policies that they want to implement, it should be about this. So there must be full employment of resources. And when we talk about resources, you remember, basically we have land, we have labor, we even have capital. And these days they had something like entrepreneurship. All right. So we need to make use of our land for production and things. We need to, human beings fall into labor. So everybody must get to work. If they propose 24-hour is going to work and everybody is going to work on shift base, so it means everybody is engaged, salaries are paid, everybody is having money, people are demanding, production is going high, so we produce more. All right, it will help. So those are the kind of things. Only if it is done well, we will be fine. So you employ the resources, you employ. So that is that. So resources, don't focus your attention on only labor. All right. So focus your attention on how money is used properly. If we have oil in the country, how are we mining it, or how are we developing the sites? All right, and doing our upstream petroleum, how is it going? We are looking at the mining, how is it not affecting our water bodies? everything, all right, the land, everything. So full employment of resources, the purpose of which is to create jobs, all right. So you see, if there hasn't been any discovery, creating jobs will just impede our growth in terms of our national income. We will just be spending the money that we have. We have not created any job yet. We are recruiting more and more. And so what the recruitment, what are they doing? Yeah, so you see policies, and sometimes they play politics with them. Yeah, they play politics with these things. So if they see that people are complaining about employment, they create something. For example, let's take the former NAPCO. They said you work for 2 years, then they will see if you can be employed into. But I heard so many people weren't employed. And you hear of the news that when they are leaving, they are now employing people, which is good if only the employment is done legally. Because I know in this our world, people pay people to get recruitment in places. And these things, at the end of the day, if it is not done in the right way, it will still affect the nation. The way we think, hey, the way we think is sometimes funny. We think that we will just put those people in there and they will go and work. No, because the way you employ the person alone shows his or her attitude that he will put into the work. So you go to the public services. Instead of them, you go there for a service. They now think that they are doing you a favor. So they will be delaying you unnecessarily. It doesn't make sense, but I don't blame them. It is the way they were employed in. Go to the private sector, take the banks, how they employ people, take the audit firms, how they employ people, take the private men, the corporate private people, how they employ people. There was a company I worked in before you are employed, you're going to interview like 5 times. Yes, at every stage. So you see, when these things happen, it really affects things. Then we will sit back and complain. How are you employed in your public sector anyway? Ask yourself that question. All right, so that is that. Then we want to solve the issues of balance of payment deficit. Balance of payment deficit. Now, we want to solve it. We want to solve it. Or you can say we want to achieve balance of payment equilibrium. Here, we are looking at a function of export and imports, all right? Export versus import. The idea is that when you export more, you get foreign exchange. So let's say you export to US and US people are buying your product. They won't pay in cedis. They will be paying it in dollar. So that is how it will be. But you too, when you import from US, you have to be paying US people in dollar. So that is how it is. Now imagine you exported less. So let's say you exported $1,000 worth of product, but you have imported 5,000 worth of product. The dollar you received, and the dollar that has come to Ghana, will it be able to pay this 5,000? No, it means that now even the exporters, we now have to go and buy the dollar, and they will determine the rate for us. And the more they increase their rate, the more we are struggling to pay, to buy and pay. And so when that happens, that is why you see prices going up, because every supplier or every production manager or every finance person in any production will put the effect of the exchange rate into the prices. That is it. And lastly, we want to talk about redistribution of income. Redistribution of income. So, like for example, you heard me in the part 2 video where I talked about the fact that there was, as of 2021, about 92% of the revenue generated to the government were from the Greater Accra region. And so what happens to the other regions? So we want to redistribute it. Good news is that when you create jobs in the various sectors, and one day we will get there because America got there. One day Ghana will get there. So we will get to a point where we have to use the trains. I'm staying in Volta region. I'm working in Greater Accra region. Within 45 minutes, the train should take me to Greater Accra and take me back home. I don't need to move to Accra, settle in Accra. I can build my house in Volta region. I can build my house in Kumasi and come to work in Accra. So when the transport system are working and everything is working, hallelujah. So that is how we hope to do. So we will distribute the income, the income and the wealth. And that is why even in taxation, when you earn more, you pay more. When you earn less, you pay less. And even the more people, the ones that we are taking for those who are paid more, we have to use it to go and establish schools and probably other institutions in the other places. All right. That's why you see more development in Accra. Everybody wants to be in Accra. The little land that is there, people are building high skyscrapers, right? Build tall buildings and everything. All right. So these are the macroeconomic objective. Now, how does these things impact everything that we are doing as financial management? Take, for example, if we solve the balance of payment deficit, prices will go down, production will be high. That's how it will be. So it then affects how people are demanding goods. It affects inflation. If inflation is down, people will have more money, they will demand goods, production will go high, shareholder wealth maximization will now go high. In fact, I must say that in thinking of macroeconomic policy, personally, I need to think about policies that will enhance technology, because technology and sustainability. Yes, we are there already, so this point must be part. How you advance technology to help production, help communication, speed up things in the economy. It helps. It helps. And sustainability, all right? So you don't pollute the environment, like the way Galamsey destroyed everything. So basically, these are the things. So you see that when things get damaged, it affects the wealth maximization. But when things are at equilibrium, you realize that, oh, everything is okay. So you have to control inflation, all right? You have to control the balance of payment deficit. Unfortunately, as we stand as Ghanaians, our debt has exceeded our GDP. So you realize that, you ask yourself, didn't they learn financial management? That is the thing. Because if you do something that is abusive of your knowledge, then you run into a mess. Because my favorite quote that I used to hear from Dr. Miles Monroe, he said that when purpose is ignored, abuse is inevitable. That's it. When you ignore the purpose of financial management, you ignore it for any other reason, abuse is inevitable. So that is one of the things we have experienced. And so I'm not surprised there has been a change in political hands. And I think if you are sincere to yourself, you realize that Ghana was going through some form of hardships. Yeah, if you are sincere and not partisan, of course, you must acknowledge as to whether you voted for them to continue, or you really wanted. You see, people really wanted change. It's just the change, the person to take over the change is what was the problem. But we all knew that we really wanted change. All right. So basically, that is that. Okay. So these policies, when you are explaining them, explain it to the extent that it is affecting the financial management objective. And therefore, how do you do that? So we look at how these objectives and how a government run this objective, how those objectives are being run, impact on our financial management. And that is what we are going to look at, the impact of macroeconomic environment. So we are going to look at it from basically, let me say, two perspectives, because that is what we can group it under. We are going to look at it from two perspectives. Number one is the impact of these objectives on demand, all right, aggregate demand. So let's look at the impact. So number one, we are looking at aggregate demand. How does these 5 points affect aggregate demand? I think in my explanation, I have mentioned most of them. So for example, if you take something like economic growth, how does it impact demand? The truth is that when economic growth is good, demand increases. Inflation and price stability, how does it affect demand? You know it. If inflation is down, prices are down, demand goes up. Full employment, if the resources are there, fully employed, like labor is employed, you get money into your pocket, you demand. The resources are available, it generates income, you will demand. Balance of payment. If we, as we are now, where dollar got to 17 and now it's coming back around 14, you see that as it comes down, we are able to purchase more things. But when it goes up, na wahala. All right, so that is that. Redistribution of income. When we distribute the income equitably to all persons in various parts of the nation, everybody can buy something. Other than that, only people in Greater Accra will be buying from the Accra Mall. Nobody will come here and be buying. So these are, you could see how that affects aggregate demand. All right. And at the end of the day, if it affects your aggregate demand, then it is going to affect your financial management, so objective of profit maximization. So basically, that is that. So that is how you explain your point. All right. So its impact on aggregate demand. Now, not only that, it influences cost and prices in the economy. So which part influences that? Cost of living and prices in the economy. There are three things that affect price. Three things. Three things. You see, yes, demand and supply is there, but what influences that demand and supply in the first place? First, we are looking at exchange rates, and you could see I've already spoken about it in the balance of payments analogy. So we have one, exchange rate. Who is the controller of the exchange rate? These are functions of the BOG. Okay, the BOG has fiscal, what we call monetary policy instrument, monetary policy arrangement. If the BOG says that every person must sell dollar at 2 cedis, it must be so. But they will be experiencing the shock. That is it. So exchange rates affect the prices and standard of living in the economy. I remember I wanted to buy a car in 2021. So I visited the car site, and the person told me it was 42,000 Ghana cedis. I said, okay. It was a Tuesday. So I said, okay, let me wait for my salary to drop the next week, by that same week, Friday. Then the next week, Tuesday, I'll come there and buy. I went there to buy the car the following week. And when I got there, the person told me it is 60,000. I asked him, this car is still sitting here. How come the price change? The person told me that because the exchange rate has increased. And do you remember to 2021? If you remember, you know what I'm talking about. Yeah. That is where the exchange rate got to 15. Yes. So basically that is it. So it affects the price. All right. The next one is interest rates. This too is a function of the Bank of Ghana. Of course, these things is purely about the balance of payment deficit that we are experiencing. So the government has a role to play in that. Obviously, Bank of Ghana is under the government. So that is what you see here, where the way how much people are selling the dollar fundamentally affect demand and supply. And when that happens, it will affect the cost of living and prices. All right. So therefore, when you are looking at the factors that affect the exchange rate, it's just about people's money and the demand, the expenditure that they do. It is also about how the economy is growing, how we are exporting and importing. These are the things that affect it. So you see here that total income and expenditure in domestic product determines the demand of goods and services. And that is the thing we as individual has a part to play. If we don't buy Ghana-made things, we are always importing. The import is so high. That is one thing. But what if what we want to buy in Ghana is not available? Then it means that we have to go there and buy. Even toothpick cannot be made available here in Ghana. We have to import. It's very sad. Very, very sad. Very sad. Why can't we work these things? But apparently, there are also other forms of toothpick in Ghana people are not interested in. Maybe it's the way they do it. Let's see. So if we import more, export less, it is going to. So you see that some government policy will be like there is no duty to be paid on exports. So one of them to encourage more export to get foreign exchange. But I must say, some individuals are doing well in terms of the export. We are, yeah, we are. Then you remember full employment of resources. So like I'm saying, the thing is not in Ghana. Why won't the person kind of import the shoes of men, ladies wear? Can't we learn, go there, learn, come and do the production here? What happened to our Ghana shoe factory? What happened? I remember when I was young, my brother used to wear a shoe made by one local guy. That shoe has been there since. It has been there since. So how come we can do our own Ghana made shoes that fit the roads we walk on? See, those people, the Italians who do the shoes that fit the road they walk on. And when we now come and walk on our roads, very soon you see that your shoe is balancing sideways. So the foreigner will now do something we call talking. So that you pitch it at the half of your shoe, and when you are walking, it will be talking because they use nails to punch it to have contact with your shoe. So the nails will hit the ground. Sometimes when you are walking on the tile floors, you hear croak, 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 croak. So these are some of the things. All right. So I think we should improve. Yeah, they say Ghana made shoes are good by definition. Yeah, sometimes it's true. All right. So these are the exchange rate. The exchange rate, we have fixed exchange rate where the Bank of Ghana will determine that this is the rate everybody must buy dollar. But we also have the floating exchange rate where it is left up to people. So you can go to this guy, he's selling the dollar at this rate. You can go to another one, he's selling the dollar at this rate. You see, more of these things will be discussed in the risk management. All right. The floating, the fixed. All right. So it will be more discussed over there. All right, so that is that. Okay, so we also have the floating where it is left to people. You only go to some countries, it is fixed. When the central bank determines the exchange rate, that's it. If you do anything contrary to that, it is illegal. But in Ghana, the black market is too much. It's too much. So it is influencing stuff. So how can't we control stuff? All right, so that is that. So the exchange rate and business, the impact, that's what we are talking about. The lower the exchange rate, domestic goods are cheaper in foreign market. So demand for export increases. Basically, that is that. The higher the exchange rate, domestic goods become more expensive. So is the market. So you see that export will fall. Import of raw material, so we are saying that import of raw material are cheaper, so cost of production to fall. So basically that is that. If I now want to, you see, they said that the Ghana rice is good, but the Ghana rice is expensive. How? So those are the way things the way things seems to be. So domestic goods become more expensive. That is even not in the foreign, even here domestic ones is becoming expensive. So you see, when the domestic thing is expensive and you are exporting it high expensive, they won't demand it, they won't buy it. And so what you realize is that export will fall automatically. Because when you take it there, though, they don't buy. Will you be still taking it there? So that is that. So we have the what we call the exchange rate and how it impacts on businesses. I think I've explained more of that. Then we have the monetary policy. So these things is the monetary policy is about the supply of money and the demand of money. The supply and demand of money, and that is a function of the Bank of Ghana monetary policy rate, interest rate. So how does that impact demand and supply? We've explained it before, haven't we? That when interest rate is going up, capital is very difficult to come by. But when interest rate is down, you can go to the bank and borrow money and have capital to do your business. But when the interest rate is high, then what can you do? What can you do? So basically, that is that. And it zooms into the whole concept of inflation as usual. All right. So when we talk about monetary policy rate, it's about the supply of money and the demand for money. If I go to the bank, will the bank be able to supply me money? Personally, I have my money at the bank affected by the DDEP, where the government has taken 30% of the money. So if you are going to take your money, you will see the fair value drop, mark to market value dropped down. That is it. That is it. So you see, it affects my own money. How then can I have a capital as a citizen in this country to do business? How is it possible? Probably if I had had my money, I will use a proper camera. You have a proper HD viewing system, a proper pixelation and resolution, not what you now experience on this channel. All right. So these things affect whether you like it or not, depending on, this is not about political affiliation. Yes, because me, I don't vote on political affiliation. I vote on circumstance that is surrounding the nation. Yes. So these are how it works. Now, so how much money is in circulation? When more money is in circulation, people have money. And if you don't meet it with production, inflation will happen because more money will be chasing fewer goods. So the fewer goods will now be priced at higher prices. So basically, that is how things happen. All right. So that is how it goes. That is how it goes. So this affects so how does the monetary policy affect business? Like I've said, we will do that in business finance, where you realize that availability of funds, cost of capital will go up, but the money itself is not available. So cost of capital will go up. Is the funds available? If not, if it is in scarcity, cost of capital will go up, of course. And because of that, the level of consumer demand will be affected, because if money is not in people's pocket, demand is a problem. All right. If inflation is high or interest rate is high, credit are problem. So basically, that is that. So it affects it, and it also even affects your exchange rate as well, inflation and everything. The last one is the fiscal policy. Fiscal policy. And that I have discussed that in my tax video. So you will see the video. Will I go to Google and type Thomas Ansah fiscal policy? There is a whole video on that. Is that okay? So I will leave. Think I will do just a brief analysis. Just find that video and what, because it's about taxation. Fiscal policy is about how government spends money. All right. And it's also about how government gets money. So basically, that is what fiscal policy is about: how government spends money and how government gets money. Government gets money by two main ways: by borrowing the money or by taxing people. All right. So you will discuss the impact. So he gets the money by taxing and by borrowing, and he spends the money. That is basically what it is. All right. So that is we'll deal with more on the fiscal policy. But just to give an exegesis of that, when government is spending more money, it means that if he's doing more construction, doing this, doing that, he's spending money. The money goes into the individual pocket, and if individuals are able to buy stuff. But like I said, when money is in the hands of individual, which is not much with production, inflation will occur. So basically, that is that. So the government will spend the money, and if the care is not taken, it will lead to inflation, because if it is not met with production, it will cause inflation. And taxation. So when we talk about taxation, we are talking about a means by which government takes money from people. If the tax rates are high, it means people's money are going to be less. Is that okay? And we can't buy things. But sometimes, because the government spends more, and this is what happened, understand it because you're a financial management person. The government spends more. If you check our outgoing government, it is said that they are the government that has received more resources in terms of borrowing and taxation. Look at the number of taxes we are having. So they spent more, but we hardly do we really see the impact of the spending. And so they will say it is into free education. It's a social policy. So we don't see how it is affecting it. my advice that as we are making the education free, we should be stringent on the values we will get from those people who are going to the free education. I am teaching in the university, and I can tell you it's very bad. It's very, very, very bad. Yes. Because when you were paying, you make sure that you achieve proper results. Free education is good, but the way the product that is coming out of it, majority is the problem. Is the problem. Let me give you a typical personal example. I have a small boy, my brother's kid, who went to JHS, but when he got to JHS 2, I made him write the BC. So I paid for extra classes and stuff to write the BC. When he wrote the BC at Form 2, his results wasn't good at all. So he had 4, 4, 4, 4, 4, 4, 4, 4. Then I think one of them, he had 2. Then I told the parents that this is a good sign. So let's let him go to the Form 3 and write the BC again. It will be better. You know what they told me? Because free education is there and that grade we can take him to school, the kid should go to school. Exactly. So look at what I was thinking. Look at what they are thinking. So you go to the free education, missing Form 3 tuitions, growing up 1 year to have a broader perspective of things. So the kid is going to, so when they go in maturity, then they graduate also from the free SHS. Now, university becomes a problem. But so very soon that one too will be free and everybody will be in there. We pray that even when they go through there, what knowledge they get, they can implement it. And other than that, it's a mess. Very, very big mess. So that is the example that you see. And when the money is being spent in that sector, you realize that the impact is in future. And you see, one of the things about financial management is long term. So when that policy was meant to see the future, to educate more people, you realize that people are not seeing the impact now. So it creates the hardship. Remember, go and watch the video on working capital management using aggressive working capital system. So that is what happens. All right. So you have to understand, you are a professional, you have to understand how these impacts circulate among themselves. Or is that okay? So back to taxation. When you tax high, and this is what I was trying to say, because they spent more and it has created inflation because the money they spent is not met up with production because the money spent is in social policies. So it is not met up with production. We did not really realize the one district, one factory that much. Yeah. So you see, it affects production. And so it creates inflation. Now, since it has created inflation and the hardship is high, the government wants to take the money back. And how does he take the money back? He taxes you. Plenty taxes. So you see the cycle. So if you want to manage an economy, if you want to be an economic risk kid, you must understand these dynamics. So do you propose I become the finance minister? Or you propose that I become a vice president? Because I'm teaching you, you are getting the understanding, right? Yes. So that is that. All right. So basically, this is it. Now, and it's a cycle because the money that he gets comes into spending. All right. And here, you see, he will tax. It's either he taxes to take them out the money, or instead of trying to meet up production, he will go and borrow money for production so that it can meet up the spending. Unfortunately, they borrow, they don't do the production. So basically, the thing is a very simple cycle. All right. It's a very, very simple cycle. All right. So we hope that things will get better. All right. So basically, that is that. I have always said that I would have wished a combination between Mahama and Baumia on the same ticket. One is president, one is vice president. Yeah, I would have loved that. It would have been a very good combination. But be that as it may, it doesn't stop the Baumia side of the story to offer support. And it doesn't stop the Mahama side of the story to accept the support. So basically, That is that. So that is what you've seen in here, all right? So government intervention and some kind of regulation is to create a competitive policy. You see, when we say, and this thing is in your exam, so check, all right? When we say a competitive policy, you put the government in a position where the government is just a regulator and leave the market for the private people to compete among themselves. So in the competitive marketplace, the government becomes the regulator. We have Airtel, right? Right now it's Airtel Tigo, right? We have MTN and we have Telecel, all right? So now the government will sit here. That is why we have communication ministry. And so information, so that ministry, that government machinery of the ministry will regulate. So we have to say that you cannot charge data prices above this, above that. Then you leave it up to them. So right now, who is running? Is it MTN or Telecel or Airtel Tigo? So they compete among themselves. All right. So with more of branding and technology, who is well branded, who is well versed into technology, discuss that one among yourself. And with that, whilst one's price is high, one's price is low. So me, the consumer, I have the chance to go to one of them. All right. So basically, that is that. So all that the government is doing is regulation and allows the private sector to compete. And that is it. So regulation can be defined as any form of state interference with an operation of the free market. So our own is make sure that as these people are operating on a free market, competitive market, we regulate them, we interfere so that they don't exploit the market, all right? So government can do that. Sometimes too not. Regulation is left to self-regulation. For example, if you take ICA, for example, ICA is regulating all chartered accountants. It's not about government. ICA is not for government. So you see, ICA is kind of a private sort of thing, but it is regulated by government laws. So basically, that is that. So he regulates. So sometimes what the government will do is that it will provide some form of assistance, all right? So that is that. And green policy is very important. Green policy. We are in a place where sustainability is a big issue. So sustainability, government checking pollutions. Have you heard of emission levy? Exactly. So that is what government is doing. So green policy, things that will promote green environment. We've heard of the ozone layer being depleted all the time. So these are things that the government will do to help the economy, all right? Because when everything is good, we can now sit in the comfort of our home and enjoy good weather and everything. Then we have externalities, all right? The externalities, we are just looking at the cost, all right, which are not paid, or the benefits which are not received by producers or consumers of product, but other members of the society. So we are not enjoying, but we are seeing the other members. So you see, for example, what is the cost to me when the trotro driver is polluting the environment with his exhaust, the fume from the exhaust? Are you seeing that? So what is the cost to me? He is driving his car, polluting. The manufacturing guy is also there, polluting. I am just in my society, what they are doing, how it is affecting me. And so to check that, the government must come in and put in punitive taxes. That is, one of them is the emission levy. So when you are bringing your car from outside Ghana, all right, and these are external people, and the car that is coming, probably the engine is not good or anything, it is coming to Ghana to affect the citizens of Ghana. That external effect is going to be on Ghana. Then Ghana increases the taxes on the import of cars. So that is that. Promote green environment, promote competition. So have you seen the motor vehicle emission causing air pollution, the thing that I was talking about, and health hazards? That's it. All right. And sometimes too, like I said, the corporate governance guidelines, which we have discussed in the earlier chapter. So now, In terms of fiscal policy, we've already talked about these things. We have what we call the contractive or the contractionary monetary policy or fiscal policy. So we have the ones that take money out of the system, and we have the expansionary. So contractually or contractionary monetary policy system will take money from the economy. All right. So how does that happen? It's all about the inflation. It's all about the effect of the supply of money. Contractionary fiscal policy. How does the government uses taxes to take money from people? You understand? So it increases the price, the taxes and stuff. It has its backlash, all right, because it makes the economy very tight and very, very difficult to live in. But we have the expansionary. That one pumps money into the system. So when government is spending more money and everything, okay, he opens it up for everybody. And so there will be low interest rate, there will be more supply of money, but it also has its backlash. All right. So that is that. He spends more, he decreases tax. All right. This one, he supplies more money into the system. All right. But when that happens, its challenge is also inflation. So, ladies and gentlemen, this is the last part of the introductory video of financial management. Of course, there is financial market and financial institution. And so this one, we will look at it later as part of the sources of finance, because in business finance, when you want to go and source the money, you have to go to the financial market. So we will learn these things under the sources of business finance. All right. So thank you very much. And what we will do is that we will focus on the past questions in the next video. That's why I encourage you to get this financial management book that I've done, because all the past questions since 2015 are there. You look at this one. Can you explain? So this is the part that I will include about the financial market. So it will be a next video that you will see. We will title it financial market and financial institutions. That will help you solve this. So can you explain this once now for 6 months? You see that? And can you explain the criticisms or the effect of that? Can you explain the agency problem, which we have done? And all these things, all right? The maximization, profit maximization, everything in the introductory video. In 2017, the non-financial objectives were there. So you look at it. So that is that. We will be these things form part of the financial market video that you have. You've done this. Can you solve this? So you see, the past questions are repetitive. You could see clearly. Agency problem, we discussed it in the earlier video, the part 2 video. So these are what you have. Financial market, dealer market, everything. You see, commercial people, these are things we do in the financial market and financial institutions. So once we are done with these videos, you should be able to solve all the past questions. So you see, the past questions are plenty. March 2023, July 2023, there are plenty. 2024, all right, they are all there. So now, why don't you get the manual? Let's walk through it together. So we will use another video to go through all the past questions and discuss the solution. So all past questions under introductory to financial management and the financial market. Are you ready for that? Then inform a friend of this channel, like, subscribe, and share it. God bless you, and see you in the financial market, financial institution video. Bye-bye.